Welcome back. In today's video, we're going to understand exactly what stocks are, how people get rich using them, and how you can start even with small money. To make it easy, we'll follow a character named James. What are stocks? Imagine a company called EveryStep. To grow bigger, the company needs money. So they divide the company into small pieces and sell them. These small pieces are called stocks or shares. When you buy a stock, you become a small owner of the company. Even if it's 0.001%, you are still an owner. Meet James, our example. James is a regular office worker. He knows that just saving money won't make him rich. So he decides to invest in EveryStep and buys 10 shares. How people become rich from stocks. The stock price goes up. EveryStep grows. Year 1, one share was $10. Year 2, it becomes $20. James bought 10 shares for $100. Now it's worth $200. He doubled his money without doing anything. Dividends. Some companies share a portion of their profit with shareholders. This is called a dividend. James receives a little bonus every year just for holding the stock. Why stocks grow your wealth better than saving? Saving money is slow. Bank interest is small. Inflation reduces the value of your money every year. But good companies grow. They make more profit, and the value of their stock increases with time. James used to save money every month, but when he started buying stocks instead, after a few years, his investments grew much faster than his savings. Should you start investing? You don't need to be rich to buy stocks. You become rich by starting early and starting small. Start with a small monthly amount, strong, well-known companies, holding for years, not days, not panicking when prices move up and down, thinking long-term, just like James. Final message. If you want to be rich, don't only save money. Own things that grow. Own stocks. Own the future. Start small. Think big.